What's up, you guys? Zoeb here from oneglancetrader.com, and today I've got a great video for anybody that sells options. So whether you're selling cash secured puts or naked puts or covered calls or naked calls, I've got a completely free resource that scans the whole of the options market and will give you a list of the best covered calls or cash secured puts by return on investment at any given date to expiration. And like I said, it's absolutely free. So what we're going to do, we're going to go through this website that you guys can see on the screen now. We'll go through the columns and all that kind of good stuff, and I'm going to give you my take on option selling scanners, and for people who are there looking for high premiums, all that kind of good stuff. I'll give you my view on how to kind of view this type of data, and then I'll also give you my view on how I use this tool to sell options on companies I want to own, and how we pick the right strike price and all that kind of good stuff. So again, if you like the sound of that, all I ask for in return is that you smash that like button and don't forget to subscribe and hit that bell notification icon. So the website in question is option-seller-roi.com. Again, I'll link to it down below so you guys can go check out the website. It's completely free currently, and again, they have a Patreon to kind of support them. You know, if you like what they do and want to contribute to it to keep the site running and free. But effectively, it's just like any other option scanner that are there, and most option scanners, like the scanner I used before I found this, was bar chart, and I paid for bar chart the annual subscription mainly to get their option scanner. You can, with the bar chart version, you can do more and more customized filtering and all those kind of good things. But for those who are just looking for a list of stocks, buy return on investment, buy date to expiration at kind of different in the money, out the money kind of percentages, this is absolutely fantastic. And I only found out about it a couple of months ago, and I can't remember the YouTube video I watched or the channel, otherwise I would credit it down below, but I can't remember, if I'm really honest. But a YouTuber was going through it, and I thought, wow, this is really good. And so I wanted to share it with you guys. Again, looking at various tools and things like that, it doesn't look like it's that well known out there. So if you do know about it, you do use it, please comment down below on your experience with it. But I'm subscribed and watch a lot of option videos, and I've only seen it on that one particular video or one particular YouTube channel. So let me just walk you through in kind of how it works. You got some minimal filtering. You do have kind of stock lists and stuff like that if you want to look at like ARC lists and various other things like that. And again, on the left hand side, you've got covered calls, cash secure puts and covered calls, and you can even search a particular stock to get the options chain and add it to your watch list so you can see future things, all these kind of different things. So it's pretty cool when you look at some of the features it has, especially 110% completely free. So I'll go into the filtering I like to use, but we obviously have the symbol of the stock, the expiration date, days to expiration, the strike price to sell the option, what is the premium, the bid ask, and the mid price. And then it calculates for you the return of the investment across the 9 days, and then what that looks like, divided by 9 in this example to get your ROI per day. So that's nearly 1% a day for Tilray here. Gives you, if you did this, annualize this out, this is what it looks like, what the current stock price is, and the distance it is from the strike price, and then what your break even is from there. And it's got the open interest, the IV theta, all the usual stuff. But one thing that's really cool here, what they have here is an earnings column. And when I use this and I see stocks on there, and I'm like, don't usually see this stock or associate this stock for high volatility. And when you scroll across, you've got earnings in a couple of days. So this is good to understand if a stock is inflated due to earnings and therefore you get that high volatility. But then it also keeps you away from stocks
that potentially have one like Tilray, for example, have it. What's the date today? The date's the 30th of March, and this is 12th of April. So you got 12 days until the earnings of Tilray. It might be one that you want to kind of stay away from that perspective. So it's good just to have that on there as a filter, so you can kind of see what's going on. So and then some very basic stuff as you would see it in any other normal stock screener. Um, so you've got the money from and the money to, and what this basically means is the moneyness from is the percentage um, below the current price, and that's from a cash secure puts perspective, or it's above the price from a covered call perspective. So the default is 0, but for me, I don't. You if you set this to 0, you're going to get the highest premiums for basically at the money options, which because it's the closest to the current share price, that's going to give you the most premium. So I at least want to be, if I'm going to sell a cash secure put, I'm not going to sell it at the money. I'm going to sell it out the money, i.e. below the current price. So I would be looking at, kind of in this example, 5%, you go 10%, 15%, it doesn't really make a difference. And then moneyness two in this example is, what's the lowest you want to go to. And, if you're selling options, especially kind of like week to 10-day options is what I've got selected here, you're very rarely going to struggle to pick up any sort of ROI or premium if you go above 25% from there. Um, Open interest, obviously you want the volume there at that option strike price. If there's no volume, you're going to be tough to get filled, or very wide bid ask prices. uh, uh, Date to expiration minimum, I'm not too fussed about that. And the maximum, because I like to look at 7 week to 2 weeks out. And I'm shooting this video on a Tuesday, so I can pick the Friday expiration. But what I've decided to do is just go a week out, and then go for next Fridays, which is the 8th of April. And then you got ROI minimum. I'm not too fussed by that, because I sort by ROI, and the max is fine, 100%. It doesn't really make that much difference. And then deltas, if you want to kind of play around with deltas. So this is what it kind of shows you at the moment. And none of this surprises me, to be honest, because you got Tilray, AMC, and GME. So GameStop, AMC, and Tilray. Those are very heavy meme Wall Street bets, retail type stocks, and with the influx recently of the increase in AMC and GameStop, it feels like again that volatility is starting to come back into those stocks. And you can see here, with the stock price, at $8.85, you sell the 8, and you're making $60 premium, 7.37% return in 9 days, which is absolutely fantastic. Crazy amounts of premiums you can kind of get from there. So again, this looks at an ROI, so not the absolutes. That's $59, $181. That is $1,190. So at this point, all it's doing is taking the premium divided by the strike price to give you the ROI. So this is the way I kind of like to look at things, is by looking at the ROI of the amount of money you're actually investing. So um, this here, if we just go through, you got Mavis. I can't remember what this one is, but you got Mara, IQ, Rivian. I think this is BlackBerry. My good old Riot in there. So Peloton, Robinhood, Fubo. You've got the usual retail stocks that you expect to see in here, and your crypto miners like Mara and Riot inside there. So the way I like to use this, right, is not so much on the strike price, right? Because let's say I am interested in Tilray, which I'm not, right? I'm I'm still gonna get a good return on my investment going at the $7, the $6, the $5, etc., etc. So I don't really care about the strike price. All I know is that if I'm investing, if I see something on here like Riot, right, 3% return at the 21 strike, I can probably get
2% return doing the $19 strike, right? So when you're looking at the list, yeah, and as I've always said, you should always invest in a stock that you are interested in and you don't mind owning at the strike price you sell your option at. But what I'm saying is if Riot is on this list, if Mara is on this list, if AMC is on this list, you will still get very good premium at lower strike prices. So don't worry about the strike. It's more important to worry about, in my view, is the stock you want to trade or to potentially invest in on this list? Yes, and if it's at a good ROI, the more you go down like percentage from the strike, you're going to get that equivalent to the other percentage of the strike. So let me just pick like, hopefully I've explained myself well here, that like this is basically 9.5% and 8.35% from the current price. All else being equal, if I went 15% on Tilray and 15% on AMC, yes, the ROI will be lower, but you'll still be getting better ROI 15% away from Tilray than you would be getting if you went 15% from AMC, right? So that's what I'm just trying to explain to you is don't be so worried about the strike because the strike's going to be relatively close um, to the current price. So if you want to invest in Tilray, look at your return on investment because even if you're making 7%, 10%, 9.5% away from the price, you could be making 4%, 15% away from the price. 4% return in 9 days is still great, but then you protect yourself by going at a lower strike. So it's all about trying to understand is what risk tolerance you're comfortable with, and then picking the strike, and then going into Tilray and doing a symbol search, and then looking at Tilray's option chain to see if a 4% return is good. So that's how I would use this screener is if you're willing to trade and protect yourself against something like Tilray, as an example, I would get a chart up of Tilray, see where the lows are, do some technical analysis, whatever it is that you want to do, find a strike price you're comfortable with that gives you that cushion if Tilray does decline, then look at your ROI, right? And then if you're still making 3% return in 9 days by going at the 550 strike, for example, for me that's a better play, right? Three and a, you annualize that. Well, let's annualize. You can look at it over here. 3.5% is still 142% a year if you manage to find those types of trades every single week. So that's what I'm saying is how best to use this. How I'm looking at this is, for example, if I'm looking at this, so I think I showed it over here. I think it was here before. PayPal. That's what I want to talk about. PayPal. PayPal is a stock in my opinion, that has been absolutely decimated. I'm not going to go into the ins and outs of PayPal in this video, but I want to own at least 100 shares of PayPal. I want to buy PayPal. But now I found it on this scanner that the current price is $120, right? I'm happy to pay $120, right? Why would I though? I might as well sell a cash secured put on it, right? So I can then sell a cash secured put at $114 and pick up, just under 1% return in my money in 9 days. Palantir, not Palantir. If PayPal goes up, okay, I lose out, right? And then I'll either patient or I'll just buy in at the price that I want to do. Or worst case scenario is that PayPal does drop, but it drops below 114. Either way, I've just made $105 or 0.992% of my money, regardless on a stock I want to hold. So this was quite interesting when I saw PayPal. PayPal's not really associated as a high flying um, volatile stock, but it came up on the scanner, and in 9 days to make 1% return holding PayPal at a price I want to buy is absolutely great. And they had earnings not too long ago, so their earnings isn't until May, and then and again, not going to go into in this video about fair value and, you know, overpriced stocks and undervalued stocks, but, you know, if I look at PayPal as a company, you know, profitability ranked 9 out of 10. This is Guru Focus, and this is absolutely free. So just search a ticker or company with Guru Focus, and you can see all this information. You know, it's got good financial strength. The bit I wanted to show was this kind of fair value rank. So um, Guru Focus use historic and analyst estimates to put together, you know, a kind of a fair value price of a stock, and you can kind of see over here where the price is. So the price is 120.64, and the fair value price according to the Guru Focus value is $207, right? Even if it was $150, it's still, you know, a good stock in my opinion to be holding. And it's saying it's 41% undervalued based on these estimates. Now, I'm not saying that you believe this is truth or fact. Do your own research and all these other things. I think the business model of PayPal, you know, who also own Venmo, you know, number one, number two best financial stocks inside the App Store and on Google Play. Massive base there, and I think that place is only going to get even stronger with their business model. So again, that's just a little fundamental piece there for you for PayPal. But again, this is how I would use this to go make 0.9% too on my money on something that I want to own anyway. Right, so I really hope you like the sound of that. Check it out, option-seller-roi.com. There are a few more options videos coming up now. Check that out, check the website, and I shall see you guys in the next video.